Welcome. My name is Akiva Boas. Welcome to the Daily Wick. This is episode, I believe, 5 or 6. Just a quick review. The reason for these videos are really just for myself to be able to go over technical analysis with you, but the basics, the fundamentals. We can get into indicators and other more advanced parts, but the basic fundamentals like support resistance levels, trend lines, patterns, and these type of things, and having volume there as a indicator of patterns, etc. We discussed yesterday the relativeness, the how related volume is to a pattern, and how important having volume follow through is more likely what the pattern is going to do for you. I actually am open to Palantir. We've been discussing this particular stock over the last several videos. We put out two trend lines. We put a long-term trend line, we put a short-term trend line. Then we put these lines over here of support, resistance, and different levels. We actually had a level over here, which was about 149, 150, that area. Just charting it out here so that you guys can see it more clear. But we had a level between 163, really, if I remember correctly, and about 150. And these are where we drew out our last support resistance levels. So, if you go into a weekly, for example, you'll start to have some clarity. You have that long-term trend line that you have drawn out in the bottom. You have that second trend line, which is a more shorter-term trend line, which we could see we're respecting that trend line very, very much. This particular candle, I believe, that's on the weekly. Let's go to the daily. We had, as you can see over here, we had the stock moving nicely on that trend line. We had earnings here. We gapped up. We filled that gap. And we've kind of based over here for the last few weeks since their earnings came out. I did discuss in my previous videos that if you got in, that I put an alarm at about 163, about 163 and a quarter. I believe I had my alarm in. That actually triggered yesterday. If I go to a 2-hour, it triggered yesterday at the close. I actually bought in the extended hours. And by the way, nothing that any of the advice that I'm giving you or discussing with you, it's strictly about technical analysis. I'm not telling you how to trade, what to trade. I can't be responsible for that. But I can give you the tools that are needed to trade, and always happy to discuss them and help you guys if you're just new, or perhaps you just want to review technical analysis. Anyway, so what I did was I actually added to, I have a core position, but I added to my position about 161 and 160, I'll tell you, I had an alarm here, 161 and a quarter, maybe it was 161 and a quarter. I put an order in after hours yesterday. I'm sorry, 163 and a quarter. I put an order in to fill, and we have been trading very nicely since. The reason why I chose that level, I'm just going back to the weekly for a second, is you had that 150 and that 162, 63 area. That was the resistance area that it was struggling. But I believe that I did mention in my previous video that if it should get above that 163 and can hold, then we probably will revisit, you have that 172 area that's a level of resistance, but I believe that we'll revisit that 190 area and continuing on this trend line. As you see, it came down nicely to that short-term trend line, and we bounced beautifully off of it. Let's go into a 5-minute just to get a little bit of what's been going on the last few days that we discussed over here. We had that more recent Friday where we were discussing about that double bottom. It bounced off of it. The volume came in, but it wasn't significant enough. Then we had Friday was pretty much a dull day, but yesterday we had that wedge that came in, volume dropped off as it was consolidating right over here. It was getting very tight, and you saw the volume come in and just took off at that point. I believe I added some to my position even yesterday around here, about the 159 area. And then we continued to push through. As you can see, after we broke that wedge, we came higher. After hours, we traded about 165, and we traded as high as 168 in the after hours markets. Um, like I said, I took a position earlier on in about 160. I think it was about 163 and a half is where I bought some shares. And then we came in this morning, and I was looking at, I drew this line. This trend, these lines, I drew a wedge, which I noticed in the morning, and I started to notice the volume. I'm just going to take it to a 1 minute so you can get more clarity on that. But we had this wedge, so we came in, the market opened, we came down, and then we started tightening up, almost coiling, if you want to call it. But I did notice, like, for example, I'm just going to draw it out in the brush over here, but you'll notice, like, how the volume topped off, the volume dropped off. And then I started to notice as we were getting right into this bar here, I'm going to try to zoom it out a drop so that you can see better. Oops. Let's remove that. So I'm just gonna explain to you. So in this bar over here, I started to notice volume coming in. It was more than the previous volume and more volume. And so I actually took this trade about 165.50, and it just climbed, tested. I had a sell in 167, and I had to sell at 168.75. I'm holding my position because it's more of a swing trade for me. But we did break out. We stayed above this line, which happens to be the volume weighted average price. So basically, just think of it as you have buyers and sellers throughout the day, and instead of seeing all this mess over here with the with the candlesticks, the volume weighted average price calculates all the buying and selling and gives you that average price that throughout the day it's been trading at. And you can see it just been, after we had that initial pop, we came into VWAP, we tested a new high, that trend line that was still valid from the bottom that we broke through, and since then we've been trading pretty much at the same range. I'm not day trading this. This is more of a swing trade. I told you my thoughts were that if it crossed that 163, that the first, I guess, target I would put about 171 or 172, that area. But I believe in the long term, on meaning on a swing trade, that once we broke that 163, that's very likely we're going to test that 172.09 and revisit old highs about 190. So that was my day in a nutshell for Palantir, which has been working in our favor. But like I said today, and it's important to note that that the key to that pattern that even set up today was having that volume and recognizing that volume, as you had the volume drop off. You had, just again, I'm just showing you, you had that volume drop off. Volume then started coming in right over here, stock traded higher, and made new highs. And that's very important because, like I said, if in order for you to take advantage of a pattern such as a wedge, right? If you had seen this, earlier on during the day, right, you would have seen a wedge forming, and like I said, that even though you had that there, you didn't have the follow through until the volume started coming, and that's when you started noticing higher prices. By the way, if you do appreciate the information that you're hearing from me, please click like and subscribe. It doesn't cost you anything to subscribe to this channel, and I think that you'll just continue to pick up some basic technical analysis, and more so get more educated in the markets as well. Yesterday was a huge day for Oracle. If you take a look, Oracle gapped up, and I want to actually put this on my radar. Oracle had some amazing numbers. Let me just move this to below. Hold on a second. Wait with me. Okay. Oracle, if you take a look, um, gapped up. We discussed gaps earlier this past week, and the importance of gaps. Now, typically, I tend to think all gaps get filled. I'll give you the example with Palantir, right? So we were talking on I think it was you can see it on the daily too. Why is this giving me issues? Come on. Oh, sorry. I just go there. There we go. So we had this gap up after earnings on Palantir, and then we gapped up from approximately, this is on a daily, 161 to about 168, moved to 190, and then we filled that gap. So as you can see, right? So you have this downside that filled this gap. Generally, most times, and I've noticed that gaps tend to get filled. What I mean they get filled is that it wouldn't surprise me at some point, and we may get continue to run a little higher, but at some point that we would see, um, you know, this come down to near or that 240 level. I know it's far away, but how do you track gaps? So what you would do in this case is, I just want to remove these from here. What you would do in this case is you would take, if you're using TradingView, you could do this with Thinkorswim also. But I'm going to create that line over here, right by right by the top of or the bottom of that bar, and I'm going to add an alert to that line, and we're going to say price crossing, um, price crossing. Let's see, price crossing down the value of what? Where is this about? So let's say 309. I'm going to put it at 309. So 309, should it cross down 309, it's going to alert me. It's going to create an alarm. It's going to alert me that when this stock comes in at all, if it does, and I'm sure there have been cases where gaps don't fill, but for the most part, if you take a look at most charts, you'll notice gaps fill. So if it should cross below that 309, that's where I would consider getting short on Oracle. That being said, if you take a look at the monthly, the stock has just been outperforming, building, and it's just been going parabolic. I mean, this is an amazing chart. And you can take a look at the news. It's based on the fact that they're filling a lot of orders, and yeah, it just you typically you'll see that. Let's review other companies. Sorry, let's take a look at the SPY first off. This is the S&P, or this is the SPY. It's basically the S&P. It's an ETF. Hold on just one second. Let's take a look at the monthly, see if we see anything. Again, we're at all-time highs, continuing on this trend. If we do get any downside, I always look at the trend line to see where we would come into. So I like to have my lines, my support resistance and my trend lines there. We do have 637.50, which we have plenty of room away from, but that's an area that I want to always keep an eye on, possibly even set up an alert in case we do fall down, because I think the next level would be 610 should we see any downside. Right now, the market happens to be particularly strong, especially with the Oracle news, and we're seeing that in gaps in NVIDIA. So here's a monthly of NVIDIA. NVIDIA, also a great company. It's been taking it a little bit on the chin, but if you take a look, for the most part, it's in trend, and it has been continuing higher, nearing all-time highs. I noticed on the daily you had a gap of about 171 to about 175. So I'm gonna put I'm just gonna leave this right here in case we get a cross below 175. So I have an alert to fill that gap. And again, when I'm looking to fill a gap in this area, I'm looking to short it, right? So where a gap fill on the upside, I'm not a contrarian. I'm not here betting against the market, but in case the market does decide to go south, a lot of these stocks like Nvidia and Oracle will give back a lot of those gains, and it creates an opportunity for me to go on the on the short side. That's why if you have a gap down, if you have a gap down, vice versa, you would want to go long. Let's just take a look over here and create an alarm. And I'm just going to add an alarm if we cross below. We'll cross down. Let's put in the volume. No, we'll put a value. I think we're going to do about 175.50. So I'd like to get closer to this. Let's just create. And now we have an alarm there in case. Truth is, I probably should have. Let me just write my notes here. Cross below. Actually, let me just put better. It's a gap fill. And we'll just save that. And let's do, we just did a moment ago, we did Oracle. Let's do that also. Let's just edit and put a gap fill. Okay. So now we have those alarms. By the way, alarms work today, this morning. I mean, truth is, even yesterday I had several alarms go off, and if it wasn't for those alerts, I would have made less money yesterday. Yesterday was my birthday, so I kind of took it easy. Today I've been a little bit more in the trade mode, looking for good opportunities. All right, so let's take a look. We did NVIDIA, we did Oracle. We looked at the SPY. We're nearing all-time highs. I noticed Apple and Amazon have been getting it over the head the last couple of days. I mean, we're still not far from the all-time highs. You take a look at it's 260 is, let's say, the all-time high, and we're we're at 227 right now. Yeah, so if you take a look at the pattern here, we're in trend, we came up, created new highs, tested that trend line, came up, had difficulty at the 237.79. So my next guess, and I'm not looking at any direction at this point, although I'm more bullish because this is on a bullish trend, as you can see, right? You have higher highs, higher lows. And we got to delve into that one at one time just to draw it out so we have a better understanding. But here's a higher high, here's a low, here's a higher low. This is questionable. We had a little bit of a test on that trend. Another higher high, higher low. Again, we came into the trend, but then we came out with a higher high and a higher low. So we're in a very good, strong. This is a monthly, so we're in a really strong uptrend. I would expect it to possibly test this area of about 220, maybe even 216, 220 before I would consider taking any position. If I should see it come into the 207, which is where it's been respecting that trend line, I would consider, I definitely would consider a long, but just something to keep an eye on. Let's take a look at another one. Let's take a look at Walmart. And let's go into monthly. I don't think we did anything. We never even, I like Walmart. I actually have a position in Walmart currently. I mean, here's the first trend line that we had, which we never saw again. Then we have from the top of here, you can see very clearly a trend. I'm not a trend, a resistance level. Let's take the next one. We had one over here. Well, let's move that down. This is so far away from where I'm actually trying to focus on. But if I'm already here on the monthly, I want to take a look at all my. I just want to plot them all out, and they'll all fit into place once I show you the daily. So again, we're looking for areas where there are resistance, where there's more than one or two candles. It's interesting over here is look at this move. Actually, let me just escape that. Hold on. Maybe make this a little bit better over here. I'm going to go closer. I'm going to take this. Oops. And we're going to go right here. I notice right over here, you guys can see it, I'm sure, clear. I happen to like Walmart. I think we have this on these two wicks on the top over here that we have to be concerned about, meaning we need to come and retest that. Provided, so let's take a look at it. So now we have the monthly trends. One more over here. Important area. Okay. Now let's take a look at a weekly. We can see a little bit clearer of what's going on. Okay. Now let's take a look at a daily. Okay, so we're near all-time high. I guess right now, a little concerning because this is a lower high than the previous high and the previous high. We haven't made a lower low yet. If we can stay above the 99.40, I'd be looking in this area. If we can stay above here, I'd be looking in this area. I just want to see if this is an area of contention right here that we actually do have. So I guess I would like to see it above 102.74, about, let's say 103, 102.70 in that area. I'm just gonna keep an eye on it right now. It's they after earnings they struggled a little bit. They came off. That's really where I bought. I'm holding the position. We did get off this, and you can see how important this trend line is right here. You have one touch, two touch, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this is a very key level. We're above it. We want to stay above it. If we can trade above the 102.78, as a matter of fact, I'm going to add an alert on this trend line. Let's cross up and let's do value. And let's say that was 102.70. So 102.75. I just want that there in case I need an alert. Right now, it looks like it's just going to consolidate over here. So that's Walmart. Let's see if it did anything on the 5-minute today. I wasn't even paying attention to it. We had a little bit of a double bottom, as I don't know if you guys can see it, but this is live, so I'll draw it out for you. Oop. Let's remove that. Okay. We have one over here, and then we have one over here. The neckline is going to be over here. So about 101.24. See if we get some follow through, but that's a double bottom. The volume is not there. If you can take a look, the volume is just very anemic. Let me just take a look at this volume. Completely died out and pretty much flat for the day. So in order for this to actually work, we need the volume to start going like this. It'd be funny if we take a look at this chart later and see that the volume came in, or vice versa. If we see this lower, chances are there was no volume. But I wouldn't trade this. It's not a perfect setup. It's far away from any support resistance areas, and there's very anemic volume. And lastly, let's do Intel. Why not? Right? Let's go to monthly. Now, Intel happens to be, I have a position in Intel. I did not take my position based on technical analysis. I happened to have bought it before the government decided to take a 10% stake in the company, and SoftBank invested about $2 billion, or plans on investing about $2 billion in Intel. I think it's a great American company. It has a bad story, has a new CEO, and I think it's just a matter of time before we revamp. So here's a different chart than what we're used to. This is a chart that is basically not at all-time highs. It's actually far away from all-time highs. So how do you map this one out? Well, in this case, I probably would put support resistance going up. So here, I'll show you what I mean. There's one. Let's see if I can get it. I know in this area we have here. We have another one here. And typically, just take that line and look for where it touches the most. And that's where you're going to place it. So the next, that's 37. We're far away from there. So I'm just going to leave those two lines there, and I'm going to create one underneath, which hopefully we never see at the 19 level. Okay, so now we can go into a weekly, and you can see it clearly trading in this channel, right? Up, down, just to give you some clarity. So you have it coming in, then you have it going up, then you have it coming in, then you have it going up and coming in, going. I'm not getting it, but now it's nearing its all-time. So when this does break, that'd be something to follow. I'm going to put an alert here since we're already setting this up. And I'm going to call this break of consolidation, or channel. Let's just do channel. And above, we want to do crossing up. And we want to do value, and that is about 26. So we'll leave it 26. Let's say 26.30. Okay, it's right there. As you can see, there's that dotted line. But this is how I go about my daily routine. I tend to like to go through the graphs. Sometimes if it gets too messy and I have so many drawings, I just erase everything and then restart from scratch. Being that if you gain anything from these videos and you're enjoying these videos, please click like and subscribe. If you have any questions, comment, please let us know. Let me know so that I could be helpful if there's a stock that you want to take a look at. And with that said, I'm wishing you all a great day from the Daily Wick. And keep on wicking, guys. Keep on wicking. Have a great day.